New Zealand business confidence crashes. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your shine of coffee because, well, you're going to need it for this one. New Zealand business confidence has crashed, and more than expected. Let's have a look at this release from ANZ, looking at their research that they've done. So feeling the pressure, and let's look at the key points. Activity indicators in the ANZ Business Outlook survey slipped a little from their early August preliminary reads, but on the whole were relatively robust to the re-emergence of the pandemic. So headline business confidence is at negative 41.8%. Was little change from the early month read, as was own activity at negative 17.5. But these reads were weaker than July, but didn't deteriorate markedly as August progressed. So that means they got an early reading of it, but it wasn't as bad. Or it hasn't really, sometimes the early reading can be wrong. So if we jump here, we'll have a look. The issue is the forecast was negative 33% on trading economics, and they actually were at negative 41.8. So they, worse than expectations. Worse than expectations, which can't be really that surprising for anyone over in New Zealand. It sounds like just the economy has just been ground to a halt. Auckland businesses are much more downbeat than elsewhere, particularly regarding current activity, unsurprisingly, but also outlook. The retail sector has driven much of the rebound in ANZ Business Outlook activity indicators since June, but is losing heart rapidly. So retail is taking a hit. So we can see here in this chart, this is own activity and business confidence. So shot up, and now it's started heading down again. Now with these indexes, 0 is neutral. So what you're looking at is a snapshot of just the number of people out there in business that were surveyed in this. If they're more negative Nancy's down the bottom, or opportunistic or confident Carls at the top, I don't know. If I just invented something terrible, I need a coffee with that one, guys. It really strained me. So you got more doomers down the bottom and more boomers at the top, hey? So, the full month August ANZ Business Outlook survey overall confirmed the decline evident in the preliminary data in business sentiment and intentions versus July. This includes business confidence and other activity expectations in Figure 1. Just a few days after publication of the preliminary August Business Outlook, the pandemic was discovered in the Auckland community. Only 5 responses came in between these two events, meaning the latter responses provide a pretty clean read on the impact of the news. Overall business sentiment and activity expectations have held up better than one might expect to take a glass half full view of things. The largest falls were in experienced activity, perceived credit availability, how busy firms say they are, capacity utilization, and cost expectations. Smaller falls were seen for employment intentions, export intentions, profit expectation, and employment versus a year earlier. And there was little change over the month for headline business confidence, firms' own activity outlook, investment intentions, and pricing intentions. See Figure 2. So we can see here change in indicators late month versus the preliminary sample. So they're comparing it to the initial sample of data they received early in the months. So business confidence is slightly up, down, everything else is down. I mean, look at that. Activity versus a year ago. That seems rather drastic, isn't it? But I mean, glass half full. However, the alert levels differ between Auckland and the rest of New Zealand. Figure 3 shows the difference between Auckland and the rest of the country for key indicators out of the survey. Unsurprisingly, there was a hefty impact on current levels of both activity and employment compared to the same month a year earlier. But Auckland firms are broadly more downbeat compared to their peers elsewhere when it comes to the outlook as well. We'll be keeping a close eye on what happens to this gap as the alert level in Auckland normalizes. We can see here, I mean, there you go, everyone. There you go. Cost everything down except ease of credit expectations. So it's going to be easier for us all to get money, guys. Go borrow, borrow, borrow. I mean, it's very similar to what's happening over here. Very similar to what's happening over here, except you're all colder over there. and you got better cheese. Having a full month of data enables us to examine the data by sector. The retail sector is worthy of particular attention. It has been on a wild ride in recent times. Let's zoom in on expected profitability through similar trends across. Those similar trends are evident across many indicators. The retail sector has typically been less optimistic about profitability than the rest of the economy over the past couple of years, and further back too. Retail is a tough gig with relatively low barriers to entry, and the move to online retail and increasingly indebted consumers makes for a downbeat sector in a relative sense. But in June and July, for a brief period, retail was relatively optimistic, as the bounce out of the initial lockdown period was more vigorous than anticipated. However, in August, the sector fell back below the other sectors, and we can see that in Figure 4. So here's expected profitability, retail, and excluding retail. So here's retail, the light blue, and there's retail minus X retail. There you go. So it's fall below. That's consistent with our consumer confidence survey, indicating households' wariness about spending is increasing in this uncertain environment. Looking more broadly at the sector breakdown, a heat map of both levels and changes on a standardized basis below shows the decline in retail fortunes is clear to see. Lots of orange in the monthly change column. However, agriculture is more downbeat compared to history in both level and change terms. There are sectors most exposed to the global outlook, which hardly inspires confidence. Service is also particularly grim, reflecting the outsized exposure to tourism and the lockdown. The construction sector is now a relatively bright spot and is broadly lifting. Construction is lifting in NZ? Why? Why? Can someone... Kiwis, can you let me know why? Despite tough times, pricing intentions for the retail sector are not low, and nor are costs particularly. We can have a look here. So business confidence, we can see that, I mean, there you go. Here we go. Construction, residential construction. What? Wow. Up 11. So our take. The re-emergence of COVID-19 is disheartening and has taken a real toll on businesses, particularly in Auckland. However, it appears that firms are looking through it to some extent, in that intentions and expectations saw relatively modest falls compared to the first half of the month. Should daily cases and hence restrictions drag on longer than expected, the negative impacts will accumulate. And the significant fall in experienced activity shouldn't be downplayed, as it demonstrates that businesses' balance sheets have taken a hit. Even if firms are relatively optimistic that activity levels will normalize once the renewed lockdown ends. So this is hopium. Hopium they're working on. That's kind of sad if you think about it. Also, although the changes in the data after COVID reappeared were relatively muted, the fact remains that activity indicators are sitting at levels consistent with recession. Has New Zealand admitted they're in recession yet? The post-lockdown bounce was already showing signs of running out of puff in July, as pent-up demand was inevitably starting to wane. The pain from the loss of international tourism will be felt most keenly once summer arrives and some of the fiscal support measures start to ease off. Highlighting that it is still early days in terms of the economic impact of this pandemic. The fiscal response is slowing the impact but can't prevent it. The monetary response is boosting the housing market but will have a very limited impact on business investment as long as such extreme uncertainties remain. A challenging road lies ahead for the economy, but New Zealand has advantages and choices that other countries would love to have. There are no good outcomes for a tourism-dependent economy in a global pandemic, but there are certainly worse ones. We can see here, this is the activity outlook down. Construction intentions. Residential is up. Residential, what are you Kiwis doing? Residential construction intentions are up. Wow. Can someone explain that to me? I need to keep an eye on New Zealand a bit more. Activity outlook index is down. Employment and profitability outlook is down. Export sales volume down. What's up? Pricing intentions, right hand side, are slightly up. Experienced activity and employment Activity, outlook the same month for the prior year is up. Employment is down. So there we have it, and this is the team that produced this information from, what's it called? Stats? No, the ANZ New Zealand Bank Outlook. So there we have it, everyone. What do you think's going to go on with New Zealand? Are they at the point where they might start actually admitting they're in a recession? And what's with the residential construction shooting up? You know, let me know in the comments your thoughts or opinions, and we'll have to keep an eye on what's happening across the ditch. Thanks everyone for watching. Please like, share and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, have a great day, and I will see you all in the next episode.